It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Macquarie predicts 2024 will be a highly hostile year for digital threats, which could be a tailwind for names in the cybersecurity sector. But which names are best positioned and what's the best way to play it now? I'm here with Fred Havemeyer, Macquarie's head of US AI and software research. Fred, it is good to see you. Thank you for joining us. So I want to start, Fred, today. We're going to start with your first pick here, which I think a lot of investors are going to know is CrowdStrike. And let's walk through some of the reasons here, Fred. CrowdStrike, you say, is a buy. The price target, $285. Your first reason here, Fred, is that you note that CrowdStrike is best breed endpoint security platform. Kind of walk us through that.
Absolutely. Thank you very much for having me on. CrowdStrike, I think many likely have been familiar with this name. It is the best of breed endpoint security product out there. So when you need something to protect you on your laptops, on your workstations, on your devices, we think that CrowdStrike is the software that you're going to go to. This is a company that excels at detecting and preventing both known and unknown threats. And in this year, where we see just the threat landscape, as we referred to and as you mentioned, becoming just exceptionally hostile, we think that you need that kind of best-of-breed protection that can manage everything, whether or not the threat has been seen before. Okay, let's go to point number 2, Fred. Let's see the second reason you believe. You kind of mentioned this, but basically you're looking at across 2024, you see an increasingly hostile environment, and this is one way to, these are the guys who are going to step in to help CIOs protect the companies. Oh, absolutely. And we see them actually leading this charge here throughout. And I think that when we look at this year in particular, like 2023 was already a hostile landscape, but going into 2024 with this presidential election cycle, with the multiple different hot wars at this point as well, too, in addition to the rise of generative AI making phishing attacks more sophisticated, just we see the culmination of a number of things, including cartel-like activity among attackers, threat actors, that we think the landscape is set up such that you are, I think, having a very constructive cybersecurity demand environment, and we think it's a really solid tailwind for CrowdStrike. All right, last bullet here, Fred. Let's see this last one. One is Gen AI-powered attacks. Yes. So that one is something we're watching very closely. We think that with the rise of generative AI, there's abundant ways that this is going to benefit businesses, but also we think it lowers the bar for how sophisticated attackers need to be to pull off complex attacks. We think it also makes personalized phishing a much more pronounced risk. So we think CrowdStrike, once again, is well positioned to help mitigate against those attacks. And it is pure play, like machine learning in the back end. It is a machine learning company. And Fred, so you're making a compelling case here. Viewers who are listening in right now, right? Before they pile in and commit capital to this name, Fred, what are just some risks they need to know about? Absolutely. It's always good to have a very healthy perspective on a company. And when we look at CrowdStrike, we tend to think that this is a company that, while we love it, still does have risk from either the company saturating in the enterprise marketplace, just hitting that threshold where it has substantial market share and it would need to move down market, which could be more competitive and where you might see companies like Microsoft really going out there with products that in that case could be good enough, may not be nearly as good as CrowdStrike, but could be competitive. And we think that competition is where things get a little risky, potentially. All right, so that's your buy, Fred. Let's also look at one you're not as enthusiastic about. That is OCTA here. Now, we don't want to overstate it, Fred, right? Because you're not going to sell. You're neutral. No, so you're basically a hold. Your price target is 80. But let's walk through some of these names, too, of why, Fred, you wouldn't be rushing to buy this one. First bullet point here, still rebuilding trust. Talk us about that. Well, Okta's had a number of significant and high-profile data breaches and data issues over the past several years now. And the company, as of this past quarter, said that what they're doing is they're focusing their time and effort and commitments and R&D commitments towards bolstering their security practices to prevent any future breaches or any sort of security incidents in the future. So really, this company is focusing on what it needs to do, which is rebuilding trust with customers. It takes time, though, and it brings risk. Got it. Second bullet point. Second reason you're at a neutral here, delayed product releases. So with this, as the company announced last quarter, they put all product releases except for privileged access management on hiatus while they focus their R&D efforts on just security. So they're delaying shipping most products and focusing on security. That brings risks as well. Like, they're doing what they need to do and the right things on trying to rebuild that trust. But in doing so, they could be deferring future growth with delaying product shipments. All right, third and final reason here, Fred, you would be on the sidelines when it comes to OCTA. Questioning guidance. Oh, yeah. I think we, at our core, are questioning whether or not guidance was sufficiently de-risked for the trust that needs to be rebuilt, whether or not the company actually de-risk guidance sufficiently in the case that churn appears going into the back half of this year.
And final point here, so what would it take, Fred, for you to get more bullish on the name?
Right. I think that if OCTA did de-risk guidance sufficiently, and if we see that churn is stable rather than the company doesn't see significant churn while it rebuilds trust, then this is a reasonably valued company. So we're going to give it some time. We would avoid it for now, but if we see signs that it addressed its security commitments, issues, and it is rebuilding that trust, there could be upside here.
All right, potential upside there. So let's sum this up for you. So you're telling investors buy CrowdStrike based on its profitable growth and AI tools. And on the other side, you're saying avoid OCTA. You're on the sidelines there as the company's still rebuilding trust and holding back product releases. Thanks. Thank you, Fred, so much for joining us today.
Thank you very much.
We appreciate it. Thank you for watching. Goodbye or goodbye.